good morning from New York City here in Times Square. I'm about to go in here, the NASDAQ, and talk some stock markets today with our Canadian friends on BNN. Yesterday we had an interesting day in the market, pretty much a wild ride that continues as investors are essentially confused what the Fed wants to do here. But Clubhouse members should be in good shape today. We're going to do one or two things here. So I will keep you guys posted on Instagram as well. Let me go in there and talk some tape.
Hey guys, it's Serge here. This was me this morning, giving a couple of interviews, actually, a couple of TV stations here from New York City at the NASDAQ market site. But what I wanted to talk to you about today is Facebook. Last time I made a video on Facebook, I'll link to it up here. A couple of weeks ago, we discussed how the stock had once again come back to sort of the very upper end of this range that it's been in, and from that perspective, it looked unlikely for the stock to be able to stage a sustainable breakout from that point. I wasn't saying that it couldn't go higher, but I was saying that it would be quite unlikely for the stock to break out sustainably up here after having run so quickly off of those February lows earlier this year. Now we're setting up another trade, and I do think this one could be something that we might be able to look at here a little bit more near term from that perspective, and maybe something on the short side for even those that are beyond, that are focused on more than just a sort of a few days of time horizon. And basically, what we saw, we had the Facebook gap higher on the 28th of April, and we've been consolidating here up here ever since, and now we're not quite there as of my recording this here right now, but we're starting to break below. Let me get the different thing here, different tool. But you're starting to see we might be breaking below those lows from the day after the up gap on the 28th, so from the 29th of April. And basically that would set up what I call a gap fill trade. That's why I titled this video Mind the Gap, and you can see essentially what that would mean is we could potentially fall all the way down here into the 109 area, let's call it, and from where, as I'm recording this right now, that would be another, let's call it, 5.5, 6 or so percent to the downside. If we look at this using our near-term moving average, the 8 and 21-day moving average, you can see we are just flirting with breaking below that 21-day moving average. That's this yellow line, and usually when stock breaks below that, it tends to show us some at least near-term signs of weakness that we should respect. So from that perspective, I'd watch this very closely. If Facebook can close below, let's call it 116, below 116, I think the stock would set up a decent trade to start filling again. Could go as low as 108, 109. Maybe you just want to be a more conservative play down into the 110, 111 area for a bit of a trade. So that's kind of what I'm looking at here in Facebook. Guys, I hope this makes sense. Please do like the video. Give me some thumbs up. That will be highly appreciated. Makes me move up in the YouTube ranks. Also, guys, follow me on Instagram. I put the link down below. We're just kicked off a big Instagram session where basically people can follow along my trading day or my life as a trader and an active investor, and just trying to teach people what I do, how I do it, and just kind of leave nothing on the table. So I hope that makes sense, guys. Any questions, please do let me know.